Welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 31st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We have had a lot of economic data come out today, and so we're going to have a lot to go over here. We had German retail sales come in lower than expected at 0.9%, which was expected a 0.1% higher. We also had European CPI flash estimate as in line with expectation at negative 0.1%. And we also had Italian preliminary CPI, which came in line with the expectation as well at 0.3%. We also had the Canadian GDP numbers come in at negative 2%, expected at negative 0.1%, so just slightly lower than expected there. Here in the United States, we had core PCE, which is personal consumption expenditures, and that index came in line with expectation at 0.2%. Personal spending came in at 1%, expected 0.7%, so better than expected there. Personal income came in line with expectations at 0.4%. And we also had the Chicago PMI, which is the Purchasing Managers Index. And I've been talking a lot about these indices lately. It is what the purchasing managers are doing going forward. So it's a forward-looking where a lot of economic data are kind of a lagging indicator. This gives us an indication as to what the purchasing managers are thinking and how they are, going about their daily business. And it came in at 49.3, expected 50.8. So that threshold of 50 that we always talk about with these data points is gone down to the below 50, which is a sign of retraction in the economy there. So that is a pretty important data point. We also had CB, consumer confidence, come in at 92.6, which was expected a 96.1. So pretty bad economic data on those last two fronts. Going forward, we have crude oil here pushing higher, right there at $49.87 a barrel, up 50 cents, still below that $50 a barrel threshold that I've been talking so much about. If it goes above $50, it looks to go like it wants to go to 60 at that point. It's more of a psychological number. This is the real resistance right here at 49.50, but I think that the $50 a barrel psychological level will be trumping the technical support resistance areas that we've seen. So that's still yet to be seen. On to the Nasdaq /NQ, down slightly on the day, as you can see here, just in negative territory. Did push higher and make new highs from what we saw on Friday, but it's starting to shape up like what I talked about. This is going to act as a resistance area as the value area high will. Anytime you get a high volume node, that's going to want to build in there and gain acceptance. So I could still see us trading back and forth between these two nodes and filling this level in. There's just not a whole lot going on. The market wants to push higher, but there's a lot of resistance overhead here. There's just a lot of short covering that's happened there. On to the EMini SPs, as you can see, we have our value area for the time that has been spent a little bit higher than the value area, which where the volume has been spent, and the overall market is pushing lower, leading to the downside here, down 5 points on the day, and looks like we are going to want to trade back down to where the most time or where the most volume has been spent, and quite likely see some of that time elapse and overlap where the volume has, which would kind of coincide with that sell-off in the Nasdaq that I kind of see happening due to the technicals there. And this is a breakdown of the EMini SPs, as you can see, as basically the overall equity data came out on that Chicago PMI. It's kind of put a wet blanket on the overall markets, and it started selling off since then. It was kind of bearish overnight, but after that economic data, that's when we really started seeing the push to the downside. Onto a couple of trades that I've done. This one I added, it's SBUX, and I decided to add a bit of a call spread in there. It has been in a negative trend. I'm hoping to see that this is going to hold as support down here, but with lower coffee prices in general, their margins should start looking a little bit better, and I think that will start being seen in their stock prices. Once people realize that coffee prices are starting to go down, that's going to have to add to the profit margin for SBUX. So I went in, plus I wanted to add some long deltas to my portfolio. I'm pretty short the overall equities and needed to add a little bit of long delta in there. And with the market rally that we've seen, this is a good time to do that. And with SBUX not participating in that rally so much, I figured that would be a good time to add it. It just might not see much of a downside there due to the coffee prices. So I went into the July, and I bought the 52.5 calls and sold the 57.5 calls to create that call spread, and paid a debit of $2.66. I did that because implied volatility is so low that in SBUX and across the broader equities, so I needed to add some long deltas, and I figured SBUX fit that bill, and I can't really sell premium around that low implied volatility in SBUX. All right, and Yahoo, I have on an iron condor in there, and I've had it on for quite some time. I'm looking to try and cover it because I'm just slightly over my 50% of max profit on that. And I have on the June 32, 34, 41, 43 iron condor. So it's the 32, 34 put spread with the 41, 43 call spread to create that iron condor, and it's like pegged right in between there and traded in that trend sideways that we would like to see in this market for that kind of position. And I originally sold it for about 64 cents. Right now I'm working at 25 cents to get out of it, which is better than 50% of my max profit. I'll probably move that up throughout the day because I want to try and get out of that today, so we'll have to see how that goes. A couple of other trades that I'm working on getting are this SLB, which is Schlumberger. I talked about this in Friday's webinar on how to create this call diagonal, and went through all the rules of how to build this strategy out. And it's a very difficult strategy to implement, only because it takes so much time and effort to try and figure out and make it work with all the rules. Because if you don't set it up correctly in the beginning, when you initiate this trade, it is destined to not work out. So it is one of the more difficult ones to actually implement because of the rules and trying to follow all of those. But you need to be steadfast with these, because otherwise you will set yourself up for losing trade. So I'm working on this right now, trying to buy the August 67.5 calls and finance it, the extrinsic value, by selling the June 80 calls. So the June 80 calls being above the market where they are now takes care of some of that extrinsic value. The extrinsic value is not what's embedded in that particular strike price of the 67.5 calls. So if we can finance the extrinsic value, then we're left on with that long call for just intrinsic value, which is the actual value of the call, and we won't see any decay in that. So in that regards, we've got to finance for the price, since I pay, or if I can pay $9 actually for that, 67.5, pay $9 for that. That puts that value at 76 and a half, which is right around where we're trading now. So that's what we're trying to do, is get it for the price where we're trading right now. And then I also am looking at LinkedIn, which is LNKD, on an up day. This is a good time to try and implement something like this. And I have I'm trying to get the July 125 calls and then finance that by selling the June 139 calls. And if I can get that for $10 and about 50 cents, that makes the width of the strikes that I try and come up with, paying no more than 75% the width of those strikes, and being $14 wide, $10.50 makes that right about 75%. So that's what I'm looking for in that wheelhouse. It's gotten away from me a little bit. Last I checked, it was trading around $10.75, so I haven't gotten that one yet. Hope to get that by the end of the day as well. That's about all I got for you guys today, but we are going to be talking about the put diagonals this Friday in the webinar, so show up for that early, because the very beginning of this webinar is really important setup for the rest of the webinar and going through all those details so that you have all of these details and all of these rules that we follow for this particular strategy, because that is really important and key to the success of this strategy. All right, that's all I got for you guys today, other than if you can't take that, take it easy.